Good morning and thanks for choosing Bloomberg Quint. You're watching Daybreak with me, Alex Matthew. First, let's look at the headlines. Asian markets falter after Donald Trump says he doesn't expect much from his upcoming meeting with Kim Jong-un. Adds he's not really happy with US negotiations with China. SBI has managed to get a handle on its asset quality, according to most brokerages, after the bank puts loans worth 25,000 crore in its watch list. New launches and sustained commercial vehicle demand is expected to aid Tata Motors in the fourth quarter. But as always, all eyes are going to be on Jaguar Land Rover. And Mark Zuckerberg angers European lawmakers after dodging questions posed to him during his testimony to the EU Parliament. With that, let's turn to the international markets and starting with the US. US stocks lost ground on Tuesday with the major averages ending near their day's low. That's as there is increased uncertainty over US President Donald Trump's scheduled meeting with North Korea's Kim Jong-un. Julie Hyman of Bloomberg News gives you the key highlights of that Wall Street session.
U.S. stocks finished lower after what was an up and down session. For much of the day, stocks trading in a pretty tight range. They started to head lower later in the day after President Trump once again said it's possible that a summit with North Korea happens or doesn't happen. That, of course, in his meeting with the South Korean president. So that appeared to be one of the triggers for stocks to head lower on the day. But there was a lot of corporate news of note during the session. Micron, for example, the big semiconductor maker, the best performer in the S&P 500 on the day, rising 6.4% after it held its analyst day. The prior session rose on that session too, but then announced a $10 billion buyback, got a lot of positive analyst reviews of its investor day, and that sent the shares higher again. And a lot of retail news in the U.S. as well. JCPenney CEO departing to head up the home improvement retailer Lowe's. That sent those JCP shares lower. Kohl's initially rising after the department store company said its earnings beat estimates, but then fell after saying it expects headwinds in the second half of the year. And speaking of headwinds, AutoZone, which is an auto parts retailer, also talking about some struggles in the second half of the year, as it says it is facing higher labor costs. That is a more and more familiar refrain from U.S. companies. Julie Hyman, Bloomberg, New York.
All right, when we take a check on how Asian markets are faring in just a minute, let's talk about US President Donald Trump's comments with regard to North Korea. He said in as many words that there is a substantial chance of it not working out. Here's Jody Schneider's report on the fallout of this possible move.
The South Koreans coming over on the plane to meet with President Trump had said there's a 99.9% chance it does take effect. And now, after the meeting with President Moon, South Korean leader President Moon, President Trump said that he has some significant doubts about whether this will occur. And so it looks like the U.S. is forging ahead. They still are planning on this. The arrangements are still being made. But at the same time, they do seem to have some real doubts, and President Trump is saying, well, we want it to go ahead, but we'll be fine if it doesn't go ahead. So he seems to be giving himself some room there in case this does fall apart.
Well, what do you think is still the deal breaker here when it comes to Pyongyang? Is it the fact that it's these military exercises? Is it this kind of so-called Libya model that John Bolton has proposed?
Those are part of it, but it really is over what does nuclear disarmament look like.
Yeah.
To the Americans, they keep saying it's very clear. It has to be complete, verifiable, it can't be undone. This, real nuclear disarmament. For the North Koreans, it really seems to be more of a step-by-step approach.
Yeah.
That's what the North Korean leader Kim favors, and also that the Americans start removing some of their military might from the region and from South Korea. So there seems to be different kinds of definitions of what that would look like. Libyan model, of course, came up. This is what John Bolton had said, and this is what started some of the back and forth about, well, maybe there won't be a summit because North Korean leader Kim and others in his administration came out and said they found those words repugnant, and John Bolton, they had got a lot of criticism from them. So it really does seem to be over the whole issue of what does that look like.
All right, we're joined live now by David Inglis from Bloomberg, and he's at Hong Kong right now. Thanks so much for joining us, David. Everyone's talking about this comment by Donald Trump about his meeting with Kim Jong-un. Is that the headline for the Asian markets this morning?
Well, it is one of the headlines. The other headline is there's no other catalyst, let's put it that way, which is why I guess we're seeing another day of consolidation, especially when you look across the currency markets, the majors, really where equity markets really take their cue from, right? And I guess just to perhaps add to the conversation here on North Korea, again, no one really knows if it's going to take place or not. You know, I talked to a few guys earlier on the shows here, both on radio and TV, and they're basically saying it's 50-50. Now, we certainly have to answer the question, who has the most to lose if the summit doesn't take place? And I guess when you answer that properly, you do get a better indication of whether or not what we're seeing out of Washington is simply just posturing ahead of negotiations ahead. That being said, though, I alluded to that already. Equities are down. We're just getting the markets up and running here in Hong Kong and Shanghai, also in Manila. So since the open about 6 minutes back, we're seeing another slight leg lower here across the benchmark. We're now down 0.25%. Virtually all benchmarks on the way down. Kospi index, though, worth noting that it is reopening today. It was shut yesterday, so maybe there's a little bit of catch up there as far as some buy orders that didn't go in. That's flat at the moment, as with the Philippines at the open. The other story, though, across currency markets is, again, trading sideways when you look at some of these majors as well. Going into this week, you know, the dollar rally, we're going for 6 straight weeks, and if you measure that across a lot of these technicals, whether you're looking at the euro, the Kiwi, sterling, maybe even throw in the Japanese yen in there as well, our jump-off point for about 48 hours back was, you know, the dollar rally did look a little bit overdone when you look at some of these technicals. So you do understand why we're seeing some level of consolidation, though, as we speak. And again, back to my earlier point, the lack of catalyst, there's not a lot of data as well to parse through today. That said, let me just wrap things up with a look at the bond markets here. Your U.S. 2-year, 2.58%. Weak demand on the auction overnight. U.S. 10-year, 3.05%, roughly the same levels this time yesterday. The 2 and the 10 curve, 48 bips, slightly flatter, slightly steeper than when you look at the 5 and the 30, but not big moves there as well. So, in other words, nothing's really happening across these markets at this point in time. Back to you guys.
All right. Thanks so much for that, David. Have a nice day. Let's turn back to India now, and Jayesh Kilnani and Darshan Mehta are here to set you up for the day's trade and also to tell you what's happening in the futures and options space. Jayesh, first to you, what's on your list today?
Morning, Alex. So expect a weak start as far as the Indian markets are concerned, because the SGX Nifty, that has in fact come off the day's high and currently trading about 10 points negative. So expect a start which will be close to the 10,540 mark as per the SGX Nifty. Now, if you look at some of the areas that traded on the US exchanges, most of them indeed traded with a positive bias. So we had Tata Motors, Dr. Reddy's and Wipro, which surged nearly 2 to 4% each, and we had Infosys also, which surged as much as 0.75%, with the only exception being HDFC Bank, that closed about 1% lower. Now, if you look at commodity cues, oil prices are currently trading with a slight negative bias, and remember that this is the second straight day that we are seeing some bit of softness in the oil prices. So currently Brent is trading about 0.3% in the negative, and as far as the base metal space is concerned, we had a mixed close on the London Metal Exchange, though the index closed more than 0.5% higher. If we can have a look at those rates as well, so you'll see that lead, which was the top gainer, that was up about 2.7%, and you had some of the other base metals which had cues coming in. So if you can just click on the base metal space, if the producer can help me over here, we'll have a look at the other rates as well. So we had aluminium, which closed lower, and we had zinc, which closed about 1.5%. Now, if you look at the Shanghai Futures Exchange, the base metals have in fact opened on a slight negative note, with the exception of copper, which is trading about 0.8 in the green. The others like zinc, aluminium and steel, all three of them are trading negative. And gold price is still under 1,300 an ounce, so no major cues coming in as far as gold is concerned. But if you look at the fund flows, something interesting happened yesterday. The FIs have sold about 1,650 crores. That's a huge number. DIs have in fact bought an equivalent amount or just thereabouts, 1,500 crores buy number for the DIs. But for the month now, DIs have sold more than 4,500 crores, and the DIs have in fact bought more than 10,000 crores worth of equity. Now, if you look at some of the key indices that we have, we had the Nifty, which closed about 20 points higher, and the mid cap and the small cap index in fact outperformed that, with the small cap index gaining as much as 1.5%. As far as gainers are concerned, we had three indices: PSU Bank Index, the Metal Index, and the Pharma Index, which were the top sector gainers. For the losers, we had the Nifty FMCG and the Nifty Energy Index that closed lower. The India Volatility Index, that actually declined about 5.5%. And if you look at the contribution, what led to the 20-point gain on the Nifty, if we can have that, SBI, Infosys, Tata Motors, and Maruti Suzuki for the bulls, and we had ITC, TCS, and Kotak Mahindra, along with Reliance Industries, which declined in trade. But that said, Darshan, what can we expect from the futures and options market?
Yeah, so yesterday it was range bound. The Nifty was up just 20 points, and nothing much happened. So that was it. If you're looking at a little bit of short covering that was seen on the Nifty, the open interest was down almost 0.7%. What happened with the Nifty Bank? That one actually moved up 10. That also saw short covering that came in because of the surge in the PSU banking index that came in in the second half of trade post the SBI numbers that came out. So this is the trade setup as such. Now let's see where the Nifty positions are being taken. Now what we've seen is the fact that yesterday call writers were active at levels of 10,800 right up to levels of 10,400, and since the market was not moving much, we saw that at 10,500, 600, and 700, the put writers actually surprisingly shed positions in open interest, not giving a very comfortable or bullish sign to the market. Now even if you look at the total open interest currently, you can see that the call side, on the call side, it's moved from levels of 11,000 to 10,800. So there's very strong resistance that coming in is in the market from 10,600 right up to 10,800. 10,500 remains the big support for the market. If that is taken out, there could be heavy selling pressure that could come in. Now if you're looking at the Nifty PCR also, you can give an indication of what exactly is happening. It's come down from 1.28 to 1.23. The Nifty Bank is showing a little bit of more strength, and that is why the Bank Nifty PCR managed to inch up from 0.75 to 0.83. The new stock in the FNO band is BEML, that was down almost 10 points in trade. There are a couple of stocks that exit the FNO band. One of them was Balrampur Chini, PC Jewelers, and Wockhardt. So these counters are no longer in the FNO band, and they did manage to rally. Stocks in focus yesterday, huge amount of short covering seen on Strides, open interest decline of 18%, and Indian Oil yesterday saw high open interest build up of 7%, but that was on the short side. So these are the stocks that we need to watch out, Alex.
All right, thanks so much for that, Darshan. And we're going back to Jayesh Khilnani for a check on commodities. Jayesh, the most recent update on petrol is that the prices have been hiked again. In Mumbai now, they're about 85 or close to 85 rupees a litre. So I'm sure everyone wants to know about where crude prices are heading.
That's right, Alex. So crude prices, in fact, have been softening for the last 2 days. Currently, if you look at Brent prices, those are trading about 0.3% negative. Now, a few factors that are playing out over here is one is the sanctions on Venezuela. So, there's concerns over the Venezuela sanctions. Also, that we understand the US has, in fact, banned purchase of any Venezuela government debt. So we'll have to wait and watch how that entire thing actually pans out. And in fact, as far as the inventory data is concerned, we are expecting that API will report crude inventory drop of about 1.3 million barrels for last week. So that will be a positive for the oil markets. Now, as far as base metals are concerned, we had the index which closed higher for the second straight day and closed about more than 0.5% higher. Copper futures were in particular focus because it hit the highest level in 3 weeks on the COMEX exchange. And this is on the back of China saying that they will not they will actually lower the import duty on cars, that the passenger cars. So that's a positive for steel and copper markets. As far as nickel prices are concerned, we had the inventory decline in most in about 2 years. So that was also positive for the nickel markets. As far as lead is concerned, we have seen that last 2 days it has actually been rallying, and we are now looking at a 5% rally in the last 2 days. As far as precious metals are concerned, both silver and gold gained on the COMEX exchange on account of some bit of softness that we have seen in the dollar index.
All right, thanks for that, Jayesh. Let's move on now and talk about a very interesting set of results. Now, SBI has reported a loss for a second consecutive quarter as provisions for bad loans surged. The loss number came in at over 7,700 crore rupees. Now, bad loans obviously front and center, The bank has put over 26,000 crore rupees worth of loans on its watch list. Vishwanath Nair has this report on the way forward for India's largest public sector bank.
While announcing the 7,700 crore loss for the January-March quarter for State Bank of India, its chairman Rajneesh Kumar didn't miss a beat before saying that the worst was behind them. Now, this is not something that Rajneesh Kumar has said for the first time. In fact, this has been repeated many times in the past, but it hasn't truly reflected how the bank's balance sheet has performed. But this time around, Rajneesh Kumar believes that they have a 2-year roadmap which can help them turn around the bank and achieve certain goals that the management has set for State Bank of India. Let's try and understand what this 2-year roadmap looks like. They want the credit growth, which is currently at about nearly 5% at the end of March 2018, to grow to over 12% by March 2020. According to State Bank of India, there is plenty of economic activity happening at this point in time, especially in the cement and the steel sector. There is also a lot of market share available because certain public sector banks have been faced with lending restrictions by the Reserve Bank of India. So there will be those opportunities for SBI to grow further. Alongside growing its loan book, SBI will also reduce its dependence on the high-cost corporate deposits so that its net interest margin can increase from about 2.67% to 3% within these 2 years. While doing these things, the State Bank will also try and cut down its credit costs and bring its return on assets from about negative 0.19 to nearly 1%. That is what State Bank aims to do in the next 2 years. Let's look at the asset quality picture, because that is where there is a lot of weakness within State Bank of India. Its gross NPA ratio at this point in time stands at about 10.91%. What State Bank aims to do is to bring it down to below 6% by March 2020. That will be closer to where SBI was before the Reserve Bank of India initiated the AQR, or the Asset Quality Review, back in October 2015. Before that happened, its gross NPA ratio was closer to 4.5. So this 6% or less than 6% will be actually closer to that. Alongside, the net NPA ratio will also be brought down to nearly 2.3%. While this is all happening, the slippage ratio, which is the ratio of accounts that move from standard to NPA category every quarter, that will be brought down to less than 1.3% within the next 2 years. That is what SBI aims. Now, while doing all of this, SBI is also trying to reorganize its businesses, ensure that stressed asset management is moved to a specialized group with specialized professionals handling it, while the rest of the bank can focus on growing the loan book and growing business relationships with corporates, large as well as mid-size. SBI is also trying to merge the project appraisal scheme, project appraisal system that is within SBI Capital Markets as a separate business. They're trying to merge that with the bank so that the bank can better monitor and better lend to corporates in India, whilst SBI Caps can continue as a pure play investment banking arm for the bank.
All right, 3.9%, nearly 4% is how much SBI shares rose yesterday. So evidently investors not too unhappy with the results. Shraddha Babla is standing by with what brokerages had to say. Shraddha, over to you.
Well, yes, so we've seen minor target price changes coming in from most brokerages without any change in stance. And that is because the asset quality damage wasn't as bad as expected, or as bad as some of the comparable PSU peers. And 75 to 80% of the slippages were from known sources. So that's the reason brokerages seem to have more or less retained their stance on SBI. You have Credit Suisse, which is one of the most bearish targets. While they've maintained the outperform, they've cut the target price from 381 to 322. That's because they've cut the EPS estimates by 3 to 20% for FY19 and FY20 on the back of higher provisions. They've said that gross NPAs have likely peaked out at in this quarter, with a bad loan cover which is much lower at 50%. Credit costs they expect will normalize only by FY20, and while residual stress is contracting, they will require further capital to support loan growth. So that's Credit Suisse. You have Bank of America, Merrill Lynch. They have maintained their buy and also the target price at 380. They've said that the recognition cycle is now behind. It's the recovery and loan growth which will drive a sharp rebound in earnings. That's their expectation. And they see SBI as a key beneficiary of asset quality and the loan growth cycle. So that's from BofA ML. Motilal Oswal has maintained maintained a buy, raised the target price just marginally from 362 to 365. They've said that the asset quality damage was controlled, with gross NPLs rising by just about 12% on a sequential basis. They do believe that earnings will gain traction over FY19, FY20, and they've raised their FY19-20 earnings estimates by 36% and 12%. And finally, Prabhudas Leeladhar again maintaining their buy, marginal price target hike of about 8 rupees to 349. They've said asset quality issues are yet to be over because some small part of stress is yet to be recognized, but resolutions will drive asset quality and earnings going forward. So everybody seeming a lot more optimistic when it comes to numbers, as we go into FY19 and FY20.
All right, Shraddha, thanks so much for that. Well, that was SBI for you, but the other big earnings to talk about, of course, was Cipla, where its limited exposure to the US did not seem to have provided enough insulation to the pharma major, which failed to meet estimates in the fourth quarter. Darshan Mehta is here to tell you all about what the key numbers were. Darshan?
Well, Alex, weak set of numbers, because if you're looking at all the parameters, be it the top line, bottom line, or even the EBITDA, it was a clear miss across the field for Cipla this time around. Even margins coming in as low as 15% versus the estimate of 20%, and profit coming in at just 180 crores versus the estimate of 438 crores. No doubt there were a lot of one-offs, which I will tell you. But first of all, the top line boost was there mainly on higher other income and other operating income. So that was something that boosted the top line of the company. Now, they did a 78 crore exceptional loss on the DPCO and NPPA issue that is there. There was a 45 to 50 crore charge on other expenses, higher expenses this time around. 51 crore loss on other income that was taken in other income on account of closure of a subsidiary in Yemen, and $11 million was the gain in operating income on the sale of patents and licensing to partners. So all these one-offs put together, despite of all this, even if you added, the numbers were still below estimates. Now, if you're looking at what would help, India continued to do well. That was up 13% on a YOY basis. North America grew 4% on a low base. South Africa, because of the currency move, moved up 23%. But look at the cuts that are coming. The emerging markets was down 3%. Europe was down 30%. API sales were down almost 18% for Cipla. So clearly weak set of numbers. Even the management commentary, what was not the most optimistic, they say that they expect US, India, South Africa to continue growth for FY19. They haven't given any kind of solid guidance as such. They're likely that India will grow at close to 14% in the year. The margins expected to improve on the back of cost controls and improving sales growth. So very generic statements that were given. There is significant amount of market share garnered in Pulmicort, which will lead to revenue growth, and they maintain the guidance of one exclusive product launch per quarter. So nothing changed much in terms of the guidance as such. The numbers were rather weak, so expect the counter to react negatively in trade today.
All right, thanks so much for that, Darshan. Now, over to the earnings that you have to watch out for today. A lot of analysts have pointed to Tata Motors as one of the most affordable blue chip stocks at the moment. That company is coming out with results today, and new launches and sustained demand for commercial vehicles is expected to aid Tata Motors with regard to its standalone business. But as always, Jaguar Land Rover is the key to watch. Here's Yatin Mota's run-up of what you've got to look forward to.
For Tata Motors, we are expecting a healthy consolidated performance. Of course, the key contribution will come in from the JLR entity. So let's talk about the consolidated earnings. We are expecting revenues to be in excess of 88,000 crores for Tata Motors on a consolidated basis. That will be a growth of nearly 14%. However, we are expecting profits to decline by nearly 14% on a year-on-year basis, to come in at close to 3,750 crores. Of course, this is because of the lower contribution coming in from the standalone entity. Margins for the consolidated entity are seen at 13% versus a level of 13.9%. However, JLR should be doing well on the operating side. We are expecting the EBITDA to move up marginally by 2%. However, we could see a good margin improvement, margin seen at 14.5% versus a level of 13.6%. So, JLR would be doing well on the margin front. Profitability, however, for JLR, because of a large base last year, would be seen down 42% to a level of 542 million British pounds. Of course, as I was mentioning, standalone business can be a drag on the overall performance. Margins for the standalone entity are seen in the range of 8.5%. Average selling price should be seen lower by nearly 3% on a year-on-year basis because of adverse currency movements that we have seen. If you talk about two brokerages, Kotak and Nomura, they're expecting the foreign exchange losses for the consolidated entity and the JLR entity to be in the range of 150 to 200 million British pounds. So that is something important we'll be watching out for. Apart from that, the management commentary on the recent trade war, impact on the overall profitability. How is really China looking at cutting taxes on imported cars? All of these factors would be important apart from the earnings to watch out for.
All right, and what Yatin just alluded to, in fact, is that China has cut its import duty on cars. That's one big update for Jaguar Land Rover. All right, let's turn to the stocks that you have to watch out for in the news today. Shraddha Babla has an entire list to tell you about. Shraddha, over to you.
Thanks, Alex. A couple of, stocks that will react to earnings that were reported post-market hours. A strong set of numbers coming in from Bata India. While revenues grew by 7%, the net profit grew by a stronger 44%. EBITDA margins also expanded from 9.7% to 13%. You also have Future Consumer, which reported a revenue growth of 51%, but they did post a net loss for the quarter, but a narrower net loss of 4 crores as compared to a loss of 10 crores in the prior period. EBITDA, however, the operational performance was strong with EBITDA growth coming in at about 8.5 times. You have music broadcast where revenues were up by about 13%, but net profit growth was strong, came in at about 3.5 times the previous quarter numbers. EBITDA margins also expanded from about 26% to 35.5%. On the other hand, we had a disappointing set of numbers coming in from Igarashi Motors. Revenue fell by about 19%, net profit declined by 13%. Operationally also, EBITDA fell by about 7%, so you could see some negative reaction there. That apart, you also have Majesco, which has won a distribution management solution contract, so watch out for that name, and also Gravita India, which has entered into a contract with Amara Raja Batteries to supply pure lead and lead alloys. This will add to the revenues in FY19 on the basis of this contract. So that's another company to watch out for.
All right, thanks so much for that, Shraddha. Well, key earnings, commodity prices, and of course the latest increase in petrol and diesel prices. A lot to talk about over the course of the day, and you'd find all of that right here on Bloomberg Quint Live. There are also several stories that you'll find on the website bloombergquint.com. Here are just a couple of them. First up, it's good news for air travelers. You soon won't have to pay a cancellation fee if you cancel your tickets within 24 hours of booking. That's provided the cancellation is done more than 4 days before the flight is scheduled to depart. And it's also provided the draft air passenger charter gets cleared. Civil Aviation Minister Suresh Prabhu told people the good news on Twitter. And a new management has been put in place at Bhushan Steel after it was acquired by Tata Steel through India's new insolvency and bankruptcy process. All right, that's all we have for you on Daybreak, but all you need to know is up next, so do stay tuned. This is Bloomberg Quint.